Good morning, good morning. It's going to be an early stream for me. Got a lot to do today, so waiting on the market open. And I'm looking at bonds. I'm not going to trade these today. This will be 50 days out. Normally I'll trade a strangle on bonds at 1 standard deviation out. And I'm looking at, maybe next week I'll do it. Bonds are down. I kind of want to grab this right here. The bond market closes at 2 p.m. today. And this would be 10% over 50 days. And then if I ran the strangle at 117, 1 standard deviation out, it would be 20% give or take at 50 days. I'm going to wait till next week and do it. Just run that at the 45 day. Just waiting on the market to open. If you guys jump in, have any questions, feel free to type them in the chat. I'm not going to necessarily do this every day, but this is just to track for those of my friends that wanted to watch this and wanted to learn what it was that I was doing. This is what I do every morning. Hear my son home in the background, screaming in the background as he's giggling at YouTube. And there is our opening bell. All right, let's take a look. So we're up 300 for the day. And what we've seen here is the trades that I took yesterday. Let's see, I traded the 7-day QQQ trade here, which is now a 6-day. So that was the July 8th. So let's just look at the positions. These are all the open trades I've got. Some are upside down. That usually happens. Since I sell premium, I'm usually in waiting for the profit to turn into something. Let's see here. July 8th. So my trade price was 209.83. QQQ did pull back yesterday, so it's a little bit upside down, but that's okay. We're just going to wait for that to move on. Today's trade, we're going to go a little bit early. Let me look at the QQQ chart real quick like a bunny. All right, we're at 725. We pulled back from the 732, and so 7 days out. I'm going to go, usually I'll wait a little bit, but it's not a big deal. IV rank of 70, still a high implied volatility. And that means good premiums and further out moves. So the expected move for 7 days is down to about the 710, 709. I like to go to divisibles of 5 because there's usually more liquidity. Not always, but usually. When it gets this close, there's a lot. So, but I'm going to go 700, and we're going to go 20 wide, maybe 780, $1.39. So I'm risking 2,000, making 135 in 7 days. Let's just run the math on that. 135 divided by 2,000, 6% in 7 days. I would, of course, set that to close. I would probably set that to close at about 40 cents. So my target would be 90. Fill that, and then just immediately set it and forget it. Like the Ronco food dehydrator, right? Good till close. Boom. That's trade one. That's about $90 in potential profit if it works. Let's see where we're at. Amazon is up. Oh, and I traded SpaceX yesterday. SpaceX is down a little bit. 394.10. I think that's about where I traded that yesterday. No, I sold that for 3. Now it's worth 4. So I'm down about $100 on that. But I got a week on that, and I'm cool with that. My open silver popped up this morning. I'm holding 100 shares that I got assigned of SLV at 70, which is down. I'm down about 1,500 on that. Let's take a look at SLV's IV rank is going up, and see if I can sell a covered call on 70 for any value yet. Nope, not worth it. We'll wait. I do believe silver is going back up, but I got caught on that one. And SPY. Let's roll a 7-day SPY. Again, we're going to roll out to the 1 standard deviation. Here, I am still bullish on this market, so 735. And let's go 20 wide, 715. That's $90. This is why I like trading the Qs better premium for the money, but $90 on 1900, or basically 2,000 minus the profit. So 90 divided by 2,000, 4.5% for the week. Not as good, but we'll take it. Little diversity, even though SPY's a NASDAQ move. And then we're going to set this to close at 40 cents. So now we're at targeting 60% profit. And we're going to go for IWM is my last one. IWM has been up. It's at 300 today. We'll go 7 days out. Oh, this one is not set to close. I usually set those to close. Oh, let's close that. So this should have been set to close, and sometimes I forget to switch for a good till close. But I sold that 107 and 23. So I sold that for 84 cents, or $84 a contract. 2 contracts at 84, 170. And it should have been set to close at like 10 cents where we're at now. So I'll show you how you manually close it if we don't. You can do 2 things. But I just do it. I go IWM, I go to this position, and I just hit, I'm going to buy that one to close at 10. And I'm going to sell that one, or I'm going to sell that one to close at 2 for 8-cent premium. Picked up both. If I wanted to do more, I could. And we're just going to close that. And we'll just leave that there. It should close. So it's 8-cent difference. Let's see. Where were we at? 7. Let's just bump that to 8 and close it right away. That is closed. And then we're going to look at 7 days out. IWM. 1 standard deviation out. Ooh, I don't like those. Really got great. All right, we're going to skip those. Would like a little bit more premium in that. It's all IV rank is only 25, where we can see the Qs are like 68. Let's see, what else can we trade? I don't like to force it. Not seeing what I love. Let's go back to these bonds. Maybe the July 24th. So bonds are done in 64ths of 1,000. So if I sold that for 10, it should sell for 1,000 divided by 64 times 10, 156.25, 156.25. And it's going to take 3,000 in buying power, and we're talking 3 weeks. 165 divided by 3079. talking 5% profit in 3 weeks. That's well within my range. However, if we run out to August, now you're trading a option on a future. So if you do, you end up picking up the contract at 108, or basically you'd pick up the bond contract at 108, which can be pricey because bonds are expensive. That would take 4,000 in buying power, but you're talking about your max loss on that is quite a bit. When you talk about this, you'll see the max loss of 107. That basically would say if this, each tick in here or each dollar movement is $1,000, and so you could, if bonds went to zero, the federal government collapsed, we've got a lot bigger problems, then you would lose all 108,000. But that's very unlikely. Bonds are down, and I like these because they move slow. So we're just going to sell. Let's just sell a strangle on this today. I was going to wait. 108 and 117, right at one standard deviation out. And this is going to be a trade that will hold probably halfway through this, but it's going to pick up 421 in premium and used 2384 in buying power. So the total trade, and I manage the strangle. I manage each leg individually, but it's 18% potential. I'm going to target, I'm really happy with 9 with half that. So this one I would set to close, and I'm actually going to do this individually. I'm going to try and buy this one at 11, pick up an extra 15 bucks. And you'll see that change to 11, so that's my offer there. And on this one, there we go, got filled at 11. And I'm going to buy that one. I'm going to sell this one at 15. And then I'm going to set this to close at 7. And I'm going to set this one to close at, we bought it 11 at 6. Oh, not 60. All right, those are set. And so the potential profit on that, let's see, 11 to 6 was 5. 15 to 7 was 8. 5 plus 8. 13 times 15.62. $203 potential profit. That is my trades for the day. That's it. Folks, thank you very much. I know I don't have a lot of people watching now, but I'm doing this and I will share it. So if you like what you see, do me a favor, click the like, click the subscribe. And if you have any questions, feel free to drop them in the chat. I will talk to you later.